This is Satya Pradhuman of Cirrus Research. The latest issue of the briefing report is just out. This is a summary take on markets, following up on key themes and how they're rolling out across the system, looking specifically at February market results. The title of this report is Policy Turbulence Hits Crowded Markets. Overall, we had a weaker market, while the larger cap names are down 2-3%, depending on the measure. You saw the small microcap market really get hit much harder. There were two or three themes that I think that are undercurrent. Really at the top of the headline here is a tariff story. But when we take a close look at our tariff baskets, this represents how firms in the US selling into, let's say, a country like Canada, how those most severely exposed firms are acting. And what we've noticed is really from the initial election day to roughly mid-December, Canada had sort of started to give some ground. But really from mid-December through these past weeks, especially with the last week of February, what we notice is that the baskets have been fairly stable. The market basically thinking that this will be ironed out, worked out. In fact, if you repeat this look for Mexico, we're seeing something quite similar. To some degree, they are strong trading partners. For what it's worth, this is likely to be less volatile. That said, the Chinese basket of the regions that we're tracking, that has actually come off quite a bit since mid-December. And so almost a 10% weakening in net of this period. So to some degree, as we barrel into the China talks, the market is definitely more on its heels regarding what kind of outcome will surface. So this was part one of the sort of volatility that's been introduced to the market, but we think there's a lot more going on here. Part two is this really the crowded market signal we've been flashing. And that played out in spades in the month of February. Importantly, though, as much as that's a tactical model saying the markets are crowded, meaning leadership stocks are expensive, what's super interesting about this is that NVIDIA's earnings report, which did come out, what it's saying is that for 4 consecutive quarters, the top line growth continues to decelerate. This is especially notable when it comes to the downstream spending that's expected on AI and potentially pricing risks in terms of DeepSeek's role in this AI unfolding. So certainly something to watch, a fundamental risk really to the critical leadership stock in the market right now. And then finally, globally, what we're also noticing is as neighbors become less friendly, we are noticing commodity prices, notably gas and gold, they have begun to escalate. They're up over about 24% for gold and about 60% for natural gas since last summer. So moral story here is that you've got another force that's coming into play if commodity prices begin to act in a more volatile way. These three things, really, we don't think this is settled. So the volatility expected in this next few months, I think, will remain high, partly because the tariff story is still front and center. We also have the fundamentals of NVIDIA, and the question is, who are the holders of NVIDIA today as it's been slowing for 3-4 quarters? And then finally, the commodity risks. The more nearshoring that everyone seems to be enacting, ultimately that is more inflationary, and real assets probably matter more. Take a look at the full report, and as always, happy to take your questions. Thank you.